There are a lot of narratives flying around AMD stock, and not for a horrible reason. We can see one of them being the share price really hasn't done anything over the last year. We're down about 18%. That doesn't look particularly good, but if we look at and also you're up around 200 for a decent amount of that too. So it really hasn't done well for most people that bought it within the last year. However, the history shows that the company has been able to provide profit back to the shareholders and at a pretty consistent pace at that as well. The other being, well, they may be doing pretty good over the last 5 years. 165% isn't nothing. However, competitors like Nvidia, maybe something like Broadcom, there's a lot of companies that have done much, much better than AMD. So if you had money in it, maybe you're not happy with how it's performed. However, we're going to dive into all that in this video, and we're going to start off first with revenue. All this information is publicly available. This is just the releases of earnings over the last couple of years, going back to 2021, which 2021 and 2022 were a good year for this company. So you can go further back if you want to, but we're not going to labor it too much. So the chart is broken down into 4 primary categories. Embedded stuff is chips that maybe aren't super crazy high tech. They maybe go, and a good example is something like microwaves, right? Microwaves, there's a computer chip in your microwave, but it isn't necessarily like a computer chip, like an iPhone chip or like an AI GPU. Not something that crazy. But I'm not saying they do microwave chips. I don't think they do. But that's a decent example of that. Gaming GPUs, things like that, CPUs. So something like in a gaming laptop. Client is primarily CPU, but there's some other stuff, I'm sure, encompassed in that. And then lastly, data center. Data center has done very well for them. It's grown dramatically, and that's primarily what I want to look at. So it's gone up. You can see so this chart's in millions up. This is $3.5 billion where it is revenue last quarter. This is last quarter. If you look back to 2021, $813 million. That is a huge increase. 3 years, it's over 3.5x. Well, let's use the actual quarter 3. So 1.1 billion to 3.5 billion, over 3x. That's pretty good, very good even. So that's what I'm seeing. And even if you look at the quarter a year ago, over doubled. Okay, we're cooking here with something, right? A lot of that is, believe it or not, they're AI chips. It is. A lot of it is. That's good. That's very good. Are they doing anywhere near growth levels NVIDIA has? No. But their AI chips don't suck. Maybe they aren't great. I mean, they aren't great. It's hard to say. My understanding is they don't have as good software associated with said AI GPUs. But at the end of the day, there's still value they're getting from that. And it's showcased in billions of dollars of revenue. So data center's done well. It's grown. Let's just assume it grows. Let's be conservative here at like a 10% rate. What I'm looking at, embedded, 927 million, gaming, 462 million, and then client, 1.8 billion. Look it back and compare. Okay, all-time highs, 1.5 billion. Okay, all-time highs, 1.7 billion. Okay, all-time highs, 2.1 billion. So you got 300 million there. You got 1.3 billion there. And you got another. So what are we looking at? Like 2.1, 2.2 billion. If you just return to all-time highs on all three, which I'm not saying you will, but if you do, and that's not crazy to guess, maybe not all at the same time, but there's literally billions of dollars of revenue every quarter if you just return to all-time highs. If you don't, let's say half that, 1 billion in revenue, that's not nothing. That really is a significant portion. So what I'm looking at, a company that is growing one segment of their business and growing it rapidly, and the others are contracting. And spoiler alert, I'm going to name 4 companies for you that do semiconductor stuff. Look at Micron's chart. Look at ASML's chart. Look at AMAT's chart. Look at STM's chart. Look at all those companies. What do you see? They're down. Why are they down? Because the broader semiconductor market is doing poorly. It is cyclical. It is a downward cycle right now. It generally goes up. It goes up, down. You see it in waves. You kind of like this, up, down, up, down. This is a poor semiconductor market. And AMD is growing their fundamental business in it. They are. So that's what I'm looking at. I'm looking at a company that is not doing well in some segments, is growing data center pretty rapidly. So that's my opinion on it, but that's what the numbers say. You have some segments that are doing poorly, data center growing fairly rapidly. Even if you expect it to not do as crazy good, I expect it to keep growing personally, but this is decent revenue. It really is. You had some highs here. It was generally the semiconductor market as a whole was doing well there. 2021, a lot of the market itself was too. 2022 was worse for the market and certainly for semiconductors as well. But what I'm looking at here is a company growing revenue pretty consistently in their key data center, and these segments are just doing poorly right now. So if you expect it at some point, right, as an investor, what we're looking at is a company that can consistently grow. AMD can do that, and they have done that. And we're looking at, okay, people are maybe missing this, and people are probably missing the fact that, oh, once these rebound and then data center keeps growing, you're going to be looking at a company like, oh, there's value here. There's value here people are missing. So that's what I'm looking at. One of the things that really trips people up with AMD when they first look at it is they say the PE looks horrible. And yes, it does on its face. 108 PE is not good unless you're a company that's growing revenue and earnings like 30% year over year for like multiple years. AMD is not doing that, but also PE really isn't as bad as it looks. I assume some of you have a decent principle of this, but there's GAAP and non-GAAP. And basically that is a way for companies to say, okay, we have to release this. This is how much we made. This is how much we lost. But in certain circumstances, like, hey, maybe you were given money by the government, or you're writing off money, you are writing off your merger with another company as debt or as a loss, which they are with Zilnex. I don't know the exact 100% details of it, but they're writing off some of that as a loss. So that shows up in earnings per share. So it shows up in PE. For GAAP earnings, they have to disclose that. So this is what it looks like on GAAP, right? 0.8, 0.16, 0.47. This is what they're going off of this year for PE. And it does not look good. Of course, it does not look good. Once you go non-GAAP, it's like, oh, this is much better. Once you look behind the hood a little bit, once you peel back the film, you're seeing something that looks a lot better than what GAAP looks like. And this is what you're calculating earnings per share off of. So non-GAAP is actually a much better look at it. And although they're going to be writing off that money for a long, long time, the earnings per share, the PE is much better than it actually looks on AMD once you peel behind. So now let's take a look at this earnings. So if we're going off GAAP, yes, you're writing off money there. Let's use non-GAAP for this video, or at least for right now. You can see it compared to revenue. So one thing that we do see as profit was a lot higher during this, even though it really wasn't that much dramatic, right? You're getting 1.13, 1.95, 0.92, even though you were at only 4.8 billion, 5.9 billion, 6.6 billion, and you have that here, but your non-GAAP earnings is still lower. And that is primarily because the profit margins was just very high. There was crazy demand, especially in late 2021, early 2022. You can see that reflected in other companies in the semiconductor industry, like TSM, for example. So, and we can see it on the annual thing as well. So revenue, although it went 43%, declined a little bit, and then 13% this year, which if you do that, right, you're up like 20% if you just combine these 2 years, and then another 13%. So revenue is growing, and it's growing very well since that time frame, and it is if you look back further than that as well. But earnings per share hasn't been quite as extreme, right? You basically were flat for 2 years and then up 25% this year. It looks even worse for GAAP, obviously, but like I said, we're not really looking at that because that isn't telling the full story. It just isn't. So the PE really isn't that bad at AMD, and a lot of people, a lot of surface level investors, and don't get me, I'm not like shaming people. It's hard because not everyone has the time to look into every individual company. But once you peel behind the hood, earnings per share and the PE of AMD really isn't that bad, right? We're getting that revenue growth, or we are, but like I said, if we look back beforehand, the revenue, a lot of our revenue streams are really not they're nowhere near their all-time highs, and we have one carrying it. So if we can get some rebound on those other ones, and we can continue to make profit that we are once we look at non-GAAP earnings, this is a company, in my opinion, that actually looks really, really solid, especially once you factor in the historical growth and the growth potential. Looking a bit at the balance sheet, I don't want to spend too much time here, but I do want to look at a couple of things, specifically the debt. So the first off, their debt really isn't that high. There's kind of an assumption with AMD, at least there was over the last couple years, when you look at PE, because they didn't have a PE or had an incredibly high PE. Like we talked about earlier with GAAP earnings and writing off that money, it looks like they're a non-profitable company at the time. Non-profitable companies generally rely on lots of debt. AMD really doesn't have that much debt. Actually, they had almost no debt, like $313 million in debt for a company worth hundreds of billions of dollars market cap is literally like nothing. But also, they do have more debt, and we saw that jump in 2022. Well, what do we know about 2022? Interest rates have started to rise dramatically in 2022. So unless they got them turning it, which is certainly possible. I don't know 100%, but it's looking to me that they probably got most of this debt right before rates started to hike. I don't know that for certain, but if they did, that's another sign that this company knows what they're doing and they're getting debt right before it gets really high. And then we can see that they didn't borrow, at least they borrowed what they knew they would need, because basically it went exactly flat. It looks like they borrowed 1 million more, or maybe didn't, whatever. Maybe a couple more, you pay some off. I don't know. But debt really isn't anything to worry about here. Also, total current assets, of course, that going up year over year over year is very impressive, right? And we want to see that. We want to see that. Equity as well, just basically everything. I'm not seeing anything, liabilities, you do have some, but that's really not uncommon. It's maybe a little high, but really nothing to be worried about for a company that is growing. So I don't really see anything jumping out here at the balance sheet all too much. Let's take a little bit of a look at income real quick. Yeah, you can see they did have that massive spike we talked about earlier in 2022, specifically when the profit margins were up, revenue was up right before all the demand dropped off. You can see we already talked about revenue and all that, and we can see also going back to 2019, it just shows how much more extreme the jump has been, right? Total revenue, 6.7 billion. We are now at nearly 23 billion. In 2023, we're going to be a little bit above that too. This is a company that has been growing crazy fast, and it has stalled out a little bit in recent years, but it's still just a company that just looks good. There's nothing here that's saying, oh, this is scary, oh, this looks bad, oh, I'm not too worried about this. To me, at least, unless I'm missing something, the balance sheet looks fine. Another important thing to look at is the PE and the history of a company's PE to understand kind of where it trades. Usually you can guess by looking at the stock historically, but it doesn't always give you a good tell. So I know we've talked about how the PE isn't necessarily perfect because it's skewed from GAAP earnings. However, even if we just look at the back throughout the years, so let's just, through 2017, it wasn't really profitable, so it didn't have a PE ratio. I mean, in 2018, it's hard because they're just becoming profitable, but it was somewhere between 100 and 57. In 2019, it was somewhere in the hundreds as well. Then we're going to 2020, it's somewhere in the 90s. 2021, when we're having that good stuff, it was somewhere in the 30s. And then now we're up here, of course. Like I said, it's skewed, but we're in the hundreds again. So historically, if we're looking at that forward PE around 30, somewhere in that range, that's not bad at all, considering this stock usually doesn't trade around these multiples. It is a growth stock. It's traded like a growth stock. It's moved like a growth stock. It's had PE multiples like a growth stock. So this is good to understand. Okay, this really, you shouldn't be concerned about any crazy, anything below 30 is very, very cheap for AMD historically with the new leadership, and anything somewhere in that, let's say 40 to 60 range is actually pretty typical. That's not to say that you have to buy it at that range, but that's just understanding where it has been. It would be really cool if share price and company performance were 100% tied together and you only really had to look at the share price to know exactly what was going on. But we know sometimes these two things are not completely tied together. Sometimes there's macro conditions or whatever that influence a share price one way or another, either better or worse than you would expect it to. And we can see AMD's been around forever, since 1984. This is a company, however, that has gone through many different time periods. Obviously, it was around during 2000, had a share price bump then. It was pretty high in 2005. But one thing AMD experienced is a leadership change near 2014, late 2014, when the new CEO, Lisa, took over. And since then, this company has been on a very big run. We can even say, okay, it was near bankrupt during this time period. So let's say this is I'm not just completely guessing. Let's just say early 2017 was when, okay, this is a pretty stable valuation for the company. It was relatively balanced, and we can say since then, let's see how it's performed over the last 8 or so years. It's up from somewhere between 10 to 15, depending on exactly when you bought it. Excuse me. And clearly that is a very, very good performance. Last 10 years, the S&P 500 is only up 200%. So if you bought during most of this time frame, certainly from 2017 to 2020, you would be happy with the performance, I would bet. Certainly if you sold any during the highs, 2021 or 2024. However, if you bought the very highs in 2021 and 2024, well, if it's weird because if you bought in the highs in 2021 and you didn't buy any lower and held it all the way through, you probably aren't too concerned and just buy and hold long term anyways. So let's disregard that for a little bit. Let's say these people either bought more here and are now up a lot, or at least a little bit, or sold during some form of highs. This is a stock that where almost every other time period buying it, you would be happy. And you can't even really look within 2 years, right? Because like we said, the underlying business itself is doing fine. It really is. So yeah, if you bought in highs earlier this year, I'm not discrediting your feelings at all, but it's just not a long enough time frame. And also, hopefully you understood what you're buying to, that you're buying at levels, at the PE rates you were, at whatever it was, when you were buying at that, not purely off hype. And if you did, maybe that's just a mistake that you made. But assuming you bought anytime within the last 2 years or before, you bought anytime before the last 2 years, you should be happy with the share price performance. And if you bought within the last 2 years, it's really not long enough for a company to truly bring back, provide profit to you. You can pick some of the best companies in the world, and you can pick some time frames, or if you held it for 2 years, you wouldn't be that happy. So that's not really a good metric to judge a stock on as a long-term hold, in my opinion. We've dove a lot into the financial side of things, so let's take a step back and look at maybe some risks and advantages that AMD has. I'm going to push forward 4 major risks that I see. Most companies have major risks, but we're just going to go with these 4. There's of course more, some bigger, some less, but these are the 4 that I am most worried about and I most see commonly brought up. The first, share price performance. We've dove into that already in this video, so we're going to dismiss that. Not that it's nothing, but that it can be accounted for, and I've already covered it as a topic. Another risk is AMD gets a lot of their materials from TSM, because everyone does. NVIDIA has this exact risk as well. Or if China were to invade Taiwan, you would lose a lot of money, but AMD, NVIDIA, Google, Apple, Microsoft, that all these companies would be dramatically affected as well, Qualcomm, all these companies would be dramatically affected, that I'm not too worried about it in the sense that it would do immense damage, and I don't really think it's too likely to full on happen, in my opinion. The other 2 then being, 1 is the semiconductor industry is cyclical. We are seeing that with some of the share price. You can see it reflected, like we covered, in the embedded, which is Zilnix, but the embedded section for them, the gaming section for them, some of the client stuff, the CPU stuff for them, it's a little bit of a downturn. We will see that with AMD, and it's not necessarily fun to ride out. However, in my opinion, the growth with this stock, the advantages outweigh the negatives with that one. And then the last risk just being NVIDIA is kind of growing way, way faster, and they're really taking a hold of the AI space, and AMD's kind of falling behind. That is true. That is a thing that is happening. However, you have to factor in the fact that it's mostly priced in. They're growing their revenue. Maybe it doesn't keep growing at the rate it is. I don't expect it to, but even if it were to grow at the basic business price at 10 to 15% per year, I feel like AMD can do that. Then it's not really a bad thing, because everyone expects that to happen. For the most part, it is priced into this company already. So it's a negative in the fact that it's not happening, but it's not a negative unless you have, let's say, share price around here. Then it's like, okay, well, I was expecting it to be way better and it's not. But if you're buying around these prices, kind of everyone's expecting it not to be that great. But you do have the upside if they can turn things around. NVIDIA has shown that it can happen, then that's very good. And that's what I think is a positive. Is they are getting their butt kicked by NVIDIA. They are, like in terms of the AI GPU space. So if they can start getting not their butt kicked as much, they're going to make a lot of money. That's an advantage. An advantage is the leadership has proven that they can derive profit in this area, and they've been able to do it consistently going back to since they've taken charge. That is an advantage. Another advantage is that they're in a really important space, data center AI stuff. It basically doesn't get better than this, in my opinion. So those are all some mega advantages. So, and I guess another risk, one last final risk, is that they do have a major player in their area, but they don't have that much competition. They have some. It's not like they have a crazy high moat, but it's also not like a car industry where there's a million other companies that are competing in the area. So there is a large barrier to entry for AMD. Now, of course, there's 100 other risks and advantages that AMD has. I don't have time to cover all of them in the video. If you have any questions on them specifically, I would love to answer them down in the comment section, as long as you give me something to work with. But now let's wrap this up and take a little bit of a look at what some analysts or what some people have to say. Schwab isn't a huge fan of AMD. Totally fine. I think most of the time I've held AMD, they have rated it very low, at least since I've been paying attention to what they say. So I'm disregarding them on this specific topic just because I disagree. You don't have to always agree with everyone, and there's plenty of other dissenting opinions on this. 4 stars here, narrow economic moat. Depends on what you're specifically looking at, but it's probably a 5 or a 6 on the scale. Definitely not like an 8 or a 9 like an ASML or something like that. Actually, ASML is probably a 10, but it's definitely not none. Certainly not none. A company of this size with what they do, there's a significant barrier to entry with them. 4 stars, buy, avoid buy. Key issue scores and things like that. If you've watched my videos in the past, my single stock videos in the past, you know I'm not huge into what some analysts have to say. Although, even though Schwab rates them an F, it looks like most analysts give them a good rating. From what I've picked up, usually somewhere in the ballpark of 2/3 of analysts recommending buy for a growth-centric stock is what you're looking for. You have above that here. We can't see the exact number. Well, we kind of can. 12 are saying hold. The rest are saying buy or strong buy. So that would indicate 37 of the 49 are saying buy. And I'm not perfect at math, but I think that's slightly over 2/3, at least off the top of my head. So analysts generally are saying this is a buy right now. They've been saying that the last couple months. Like I said, generally I don't put too much weight into analysts because honestly, they try not to get too far away from the herd because they don't want to look stupid one way or another. And they'd much rather not look stupid than be right and take their head out. So future, let's take a little bit of a look at the future of this stock and kind of project. Clearly, I have no crystal ball. I don't know what the future entails. Any company can have any sort of scandal or just have a downturn in leadership. Weird things happen. However, for me, with projecting AMD, I expect this stock to perform well. I expect it to outperform the S&P 500 over a long time frame. In 5 years, I would expect this stock to be somewhere in the realm of about 400 share price, maybe 350. That's what I would expect it to be. Maybe not consistently, but it to peak around there. Like I said, I do not do long-term outlooks, but that's hopefully what I would expect as an investor. I am an investor in AMD, and that's kind of where I would project it to be. That's what, a 200% increase over 5 years. That is dramatic at its peak, but like I said, we are not at all-time highs or near it. We're a bit at lows, and AMD has a track record of performing very, very, very well. Now, if it outperformed the S&P 500 during this time frame, I wouldn't be complaining really at all either. So I've covered a lot of topics in this video. If you have any questions or think I made any mistakes, let me know down in the comment section. I appreciate the few of you who made it this far. I appreciate you for watching the video this far. If you did enjoy, it helps out the channel, and subscribe if you are new. But I appreciate all of you for watching, and I'll catch you next time.